Hi everyone, this is Mayank and welcome to my channel. So today we'll discuss about agrochemical stock, a particular stock. But before that, let's talk about what's happening in the agrochemical sector. So you've seen in the past 2 to 3 weeks, there has been a strong rally in the entire agrochemical sector. So any stock you pick is of rallies in terms of Dhanuka, in terms of any Indian domestic dominant or domestic market focused agrochemical companies, they all are getting rallied around 25 to 30%. There are multiple reasons behind it. One of the reasons the monsoon has been much better. The sowing season has been much better. Because of that, there is a lot of focus towards sale of these agrochemical products. And also, if you see post-election, the BJP government has not got the votes from the rural side of India. Okay, so they have focused a lot on the agrochemical sector, like basically agriculture sector, and increasing the farmers' income. So now to increase that and overall put a focus on the agro sector or agriculture sector as a whole, this particular agrochemical sectors became a focus. So if you go in the charts and you see after 4th June only these stocks have started rallying, and after 4th June almost 2 months now, if you see there's a good rally of 25-30% in all the agrochemical stocks, some to an extent chemical stocks also, who are little bit in the agrochemical sector, who have some kind of exposure to agrochemical, they also have rallied a lot in the last 2 months. But this happened only there, when there is a reason for it. But there is a particular stock which has been growing at a CAGR of around 30%. So growth CAGR, not the price CAGR. So growth CAGR at the rate of 30% for last 3 years. Okay, it's a small cap stock, almost like a macro cap stock, but has been doing very good. They are doing very good capex also, and they are very fundamental way of operation. So we'll talk about that particular stock in today's video. We'll go through what this company does in detail. Then we'll go what's the future plans and how it want to grow. So the idea of the company is to grow very sustainable way. They'll grow slowly and they have a different way of working compared to other agrochemical stocks. So we'll discuss about that stock in detail today. And end of the video probably will get to realize why this stock is one of the outlier in the entire agrochemical space, especially in the small cap and macro cap range, right? So let's jump into the video in the help of slide and then we'll discuss the fundamentals of this particular stock. So the stock what we're going to discuss today is Dharmaraj Corp. Okay, so it's a long-term growth story which stock is looking for. I'm not saying that you invest in stock only for a very short-term gain, which you might get also because of the market specification and market scenario right now. But the stock will give a good return in the short term because of market, but the stock has a potential to give a very good return in the long term as well. So we'll discuss those scenarios for long-term investment perspective in this particular video. So Dharmaraj Corp is a very small cap company, almost a market cap of close to 1100 200 crore of range. Okay, it's almost a macro cap you can say, but very small cap company, but doing very good in terms of the fundamentals. So first, let's know about the company. So what this does? So this company is incorporated in 2015, and they're a first gen promoter. So there's no background of it. Okay, in the agrochemicals and farming background, and they have three divisions: branded formulations, institutional formulations, and active ingredients, which is just now they launched a few months back. We'll talk about active ingredients in the later part of the video. And they have been doing this particular thing from 2016, the entire operations of their business. They registered in 2015, but started operation in 2016. What the core purpose? So they are saying to provide radical solutions to human beings in such a way that they can grow with full potential and improve their prosperity. Basically, providing good chemicals or agrochemicals so that a better quality of food production can be done. Okay, so what is the end goal? They want to become a 2000 crore company with a market cap by 2030. So as per their data, this is the aspirations, but they will become much before 2030. This is what it looks like. So let's go into the next thing. So in terms of numbers, what this company does? The company has a domestic presence of more than 15,000 retail points. So this company, as I told, it sells agrochemicals. So there are a lot of ways it can sell through farmers directly or through distributors in retail shops which sell gardening products or farm agrochemical products. So through multiple ways they can go that. So retail touch points, they have 15,000 retail touch points. They have more than 5,000 dealers and distributors. Customer base institution, they have around 700 plus customer base. They are present in 29 countries. That's a huge number. A company which is only around 1100 crores of market cap, and the presence is 29 plus countries. That is huge. And they have 250 plus products in their portfolio. They have around 8,000 metric ton production capacity of technicals and intermediate capacities, right? And they have around 535 total product they want to target. Like they have registrations all total so far of 535. The team strength is 580. On ground sales force is 220 plus. 85 export market, they have product registrations. Okay, and addition 202 is pipeline. So basically, if they get all these things, the total is somewhere around 287 products which they will have registration in the entire globe, right, wherever they export. And they have 15 technical registrations and 28 under registration. So they are a proper research oriented company. Okay, and if this say research oriented company, this company is, if you go to the Concall letter, the idea of this company is first to create demand, understand the demand, and then research expert that, and then sell the product. So they are not like they will just create the product and they will start the marketing initiative and sell it. No, first they create the demand and then they go into the market of selling. So this is a different way of operations. So this is what it makes the company different from others, because the operation way of operation is very different, and that's why this company is very very frugal. Okay, so if you go to next slide, then realize their presence across the value chain. So as I told you, there are three things. One is active ingredients, then there is formulation manufacturing, then there is marketing. So in the formulation manufacturing, they have a 25,500 ton per annum capacity, and they have 8,000 ton per annum capacity which they have started. So in January they started, in the last January, February, March quarter, they sold very less, almost 30% capacity utilization they have done, but that is a very small number in terms of sales. Okay, I think around 50 crores something they have sold. And this is also works as a back end or integration with their existing formulation business. So this entire active ingredients can also be used as a raw material for in-house utilization for the formulation business. Now marketing they are doing through B2B and B2C. In B2B they have around 15,000 touchpoints already seen that, and they are hiring more people, marketing agents, to market their product into the B2C domain. Okay, and they have actively built working relationship with the entire agrochemical industry in the past 9 years. So this is what they have done in the entire sector. If you talk about next slide, then this is the business model. Okay, so how they create, I told you. So first they generate the demand, and then they go ahead in that region. So if you see the size, so size they have two divisions, right? Institutional formulations and branded formulations. In the formulation business, around 1688 million, okay, of revenue of Indian rupees basically comes from branded formulations, and institutional around 4842 million. Okay, so that's around in rupees. So 26% revenues comes from branded formulations, and 74% comes from institutional formulations. But in the profit part, their 74% revenue contribution generates less gross profit margin or less EBITDA compared to the branded formulations. So branded wise, the revenue contribution is less, but EBITDA contribution is more. So if you see, around 14 to 60% EBITDA is in contribution is there in the branded formulations, but only 10 to 11% in the case of institutional formulations. In the growth trend, if you see, the branded formulation last 5 years has grown by 29% CAGR. Okay, and domestic branded business is across 24 states. And the domestic institutional 5-year CAGR is almost 41%, which is growing faster than your branded formulations. Export also is growing around 31% for revenue CAGR in terms of branded institutional formulations. Okay. So this is how the company is placed. If you talk about their new setup, which is active ingredients, they started in January, and in the February 24. So it started in February contribution, and by the time they have done, it contributed around 150 crore. Okay, but their margin is very high in this product. So it's a up to 33% gross profit margin is what they are saying. But right now this particular plant is running in losses. Okay, we'll talk about that also when we talk about the con call summary. So right now it's looking at losses, but there is projection that by 2027 this will turn to profitability. You talk about the presence throughout the nation. 2016 they started with these four states: Gujarat, Madhya Pradesh, Bihar, Chhattisgarh. Once they conquered these states, they moved to Rajasthan, Jharkhand, and Karnataka. They started B2B in 2018, but B2C they are starting 2024. Then 19 Telangana, 20 West Bengal, Assam, 2021 Orissa B2B started Delhi, Andhra Pradesh B2B. Then 2022 Uttar Pradesh and then Punjab, and then Jammu Kashmir, Uttarakhand, Andhra Pradesh, Karnataka, Telangana. They came in this 2024. So Karnataka, Telangana they were B2B before, but now they started B2C because B2C has higher margins. Okay. So now they're covering 24 states after all these. After all this expansion, they are covering 24 states. I think almost India is covered. The regions of Northeast are pending, but they are quite remote, and so they might take some time to reach up to there. But if you remove these 780 states from, including Sikkim, the 80 states which you can remove. So if you remove the 80 states and Jammu and Kashmir region, then they have covered entire India. So pan India operation is there for this company. If you go to next slide, then say what formulations they do. So in the formulations, institutional formulations, they have around 5 products: insecticides, herbicides, fungicides, microfertilizers, and plant growth regulators. So details of this you can go through yourself. Then when they move forward, then they have active ingredients. So this active ingredients is something which they started new, and this has a lot of potential because this is a higher margin business, and around almost 30% of their in-house needs can be fulfilled by this particular manufacturing capacity was the setup for active ingredients. So if you read more about that, the capacity is 8,000 ton per annum, okay, where they can produce around 5,005 ton per annum technical capacity and 2,500 dedicated intermediate capacity, right? And they are going to spend, like they spent around 105 crore. They recently did IPO for that. So 105 crore got invested in this particular thing, particular capacity, and they have a potential of around 2.5 fixed asset turns. Okay, so if they invested 100 crores, they can earn up to 300 crores and 300, so 250 crores kind of thing. What the investment is. Okay, so that much is the turnover ratio. The total project cost is around 275 crores, and the potential of almost 7 to 800 crores kind of thing overall from this plant. And in that, they, like this is the bifurcation where they invested. 61% of money has gone to plant and machinery, building and civil structures go 28%, and like that they have this shown this bifurcation of investment. So this is how the company is operating. If you see in every slides, they have institutional formulations, they have active ingredient, they have domestic formulations, and they are spread throughout the India. Now, when you go and see the fundamental numbers of this particular company, so we'll have a comparison slides, okay, where we can go and compare. So I have added here basically, I'll just see here. So there comparison between I have done this is particular is Dharmaraj Corp, and if you compare Dharmaraj Corp with NACL, Punjab Chemicals, Hiranba Industries, Excel Industries, Megmani Organics, India Pesticides. So why I have taken these companies? Because they somehow it can double from here, and then you can probably reach up to Indian pesticides. Okay, so when you see a stock which is double the market cap, then it's easy to compare that if this stock, this company gets double, then how it sits along with its peer group. Okay, so there are few numbers very important when we talk about. One is PEG ratio. So PEG ratio, if you see out of all the competition, their PEG ratio is the best. Okay, almost 0.49. If you see their ROC is almost the second best. Punjab Chemicals is the best one in the range, like peer group. And Punjab Chemical also is a very good stock, which we can discuss in some other video. They are also rallied a lot recently, and but they have a lot of potential. And we can see there's some recovery going on in Punjab Chemicals. So if you open Punjab Chemicals chart, it has big U kind of curve what is happening in Punjab Chemicals. So maybe later point in time we can discuss about Punjab Chemicals. So you can let us know in the comment section if you want me to discuss on Punjab Chemicals as well. So coming back to your this particular Dharmaraj Corp. So their ROC is also good compared to peer group. And then when you talk about price to book value ratio, it's almost second lowest compared to NSCL, but still in terms of the growth it has a very good decent uh, price to book value ratio. In terms of growth, if you see last 3 years, the sales growth is 30%. So which is highest among the peer group, and if you see more than peer group also stock which have market cap 4,000, 5,000 crores also, some of them has not reached this particular sales growth of 30% for a year in which it was a muted sector. So for last 2 years, if you see, there was no growth in this particular sector, but it's the only company which is growing at such a speed in terms of sale. Profit also has grown in the 29.28% of CAGR for last 3 years, and this company is also saying that the same journey will continue of around 25 to 30% CAGR. They're saying 25%, but the profit after tax can go up to 30% also CAGR. They can keep on growing if there is a few conditions. There is no macroeconomic condition is not that bad, and raw material thing has in the plant which they have set up, that also comes as per the plans. If everything goes all right, it can grow at a 30% CAGR of PAT also. So this is what the company forecast. So this you can pause if you want to compare with all the other peer groups. But all in all, this stock has the best fundamental in the peer group, even with a company which has double the market cap of the current state of this company. Now let's go and talk about what the future holds for this company. What is that management has guided? Okay, so there is a summary which has said what this company are going to do and overall what they are planning based on the con call letters of last quarter result. Okay, this quarter result has not yet come out. So they are saying 900 crores of total sales that can happen, out of which 800 crores will happen formulation, 100 crore will happen from your active ingredients, right? So total 900 crore of sales they will do in FY25. So let's talk about the history and all, like the plant, the new plant, what they will do. So they started with 7 6 products like in the January or February, and slowly and gradually they will start adding more products and more molecules. So this is phase one. Phase two, they will start three more molecules, right? And average monthly production from this particular thing will be 200 metric tons per month. That is in 30% relation. Okay, so 30 200 metric ton per month. That means it's somewhere around 2,500 metric ton per year. That is the capacity. That is in 30% capacity relation. That means this plant has a capacity of around 8,000 metric ton. Okay, and this 30% results in revenue of 275 crore. So if this reaches 100%, which they are saying 100 in the sense 80% on paper, so this can reach in the year of FY27 kind of thing. So that time the revenue can go up to around three times of the current revenue. That is somewhere around 800 crores of yearly revenue this plant can generate. Now they are saying there is a price increase in pyrethroids. Why this price increase in pyrethroids? There is a market leader called Garda. Okay, so the Garda is the largest manufacturer of synthetic pyrethroids, and in US there is no one who produces pyrethroid. Okay, I'm saying this because this company has told in Concall letter in one of the questions that they are targeting a good growth in US if there is no recession and things like that, because there is not a single pyrethroid manufacturer in US, and Garda used to supply that, but since Garda is shifting the plant from Dombiville to Sayakha, where this company also has a plant. This new plant is in Sayakha, and it will take around 2 years for them to become operational. So those 2 years they will shortage in the market. So in these 2 years they can sell their product in higher price. And this pyrethroid is one of the product which is getting produced from this new technical division which they have done in this place called Sayakha. Now they start exports in April, achieved 27 crores of sales in April plus May. From this, I'm talking about this particular technical division of this particular active ingredients only. So this entire slide is about that. Quarterly, they're expecting a depreciation of 3.7 crores because this plant is only 30% utilization, and there's a fixed cost is same, doesn't matter. So there'll be 3.7 crore of kind of around 5 crore of loss. Total, they're saying around 9 crore of loss will be there in every quarter kind of thing. Okay. So out of 9 crore revenue, so overheads, they have some kind of revenue, and total, as per I remember, their loss will be around 5.5 to 6 crore as per the Concall letter, not 9 crore. It's around 5.5 to 6 crore kind of thing. They're targeting 70 crore annual overhead for the entire year for this plant, and they will have a loss of around 15 to 20 crores overall in this plant. So they will generate a revenue of around 150 crore sales, out of which they are saying they will go up to 100 kind of expense of the plant, and then the loss will be around 15 20 crore, and they will break even at 220 crore of revenue. Okay, so this year they are 150, and they are saying by FY26 if they reach the utilization level of 40%, then they will become break even, and then FY27 when they reaches around 400 450 or 50% utilization kind of thing, then they will get a 3 to 4% EBITDA margin improvement, because the production of excess production from this plant will be given as a raw material to the other compounds what they are manufacturing. So this together will give you 3 to 4% EBITDA margin improvement in the overall company's financials. And when they reach around 800 crore, that is the potential of this entire plant. So this is what this new plant is all about. Okay, so a lot of question was there in the con call that why this plant, what the use of this plant, by when they have to break even, how much money it will generate. So this is the answer for all the questions. If you go over next slide, then it's about other products, right? So they have around B2C division and B2B division. So B2B, they have tacked new 4 states. We discussed already in South, they have come. Previously, it was only B2B. So Orissa, Andhra, Karnataka, and Telangana. So these 4 states they've added now. Somebody asked what happened to Rajasthan when it launched last year. So last year they did a sales of 13.5 crore. This year they done a sales of 23 crores, almost 80% growth. Gujarat also, they are saying Gujarat sales was 80 crore last year. It also grown a lot. And they're forecasting their B2B growth will be around 25% in FY25. And their B2B growth will also be 25% in FY25. So overall the growth will be around 25%. This is what is they are saying. Volume growth in last year was 45 to 55%, where they're expecting from 800 crores formulation sales in FY25 and around 150 crores from the technical division. So total sale will be around 950 crores. So this is what they are saying. Now, in terms of credit period, they are saying the credit period will increase. So 90 days credit period was their formulations, and 120 days credit period is for technical division. So if you take an average out of all those things, your credit period can go up to 100 days. If you see next FY results and all, if you compare, it can go up to 105 days. So they given a already a forecast that people don't get surprised. See, one of the very good thing about this company, if you see the Concall letter, they're very transparent and very clear about what they talk. Okay, and sometimes they also get frustrated in the call because some questions getting repeated, but every answer they're given in the concall letter, and they're very transparent about where we're going to make loss, where we're going to make profit, and by when we can make profit, and all those informations are very very concise and very to the point in the concall letter. So this is one of the best part of the management which I liked after reading few of the concall letters. So this is about this particular company. Okay, so if you see, if you just try to collaborate everything, right, so they are into a market cap which is very small, and they are growing sustainably. One important point what I missed in this particular slide is, normally what happens, people, any company, right, so they give the product on the shelf of the retailer, and then it doesn't get sold, they take it back, okay, and they give it on credit. So this company has a no credit policy, they doesn't give on credit, and they don't take any sales back also. Okay, so this company is not like they will give the product and then they will generate the demand, and if the demand is there, the product gets sold, otherwise they will take it back. So there is a reverse, like the entire calculation of profit and all goes back, like it gets estimated next quarter. But in this company, the that process is not there. Their return ratio is only 1 to 2%. Okay, that is also in the worst case scenario if the product gets expired or things like that. Their return ratio, but they only sell the product when there is a demand. So they create a demand and then they go for sales. Then why? How do they do that? So if you go to Concall letter again, so they will tell that they conduct a lot of events, a lot of seminars to the farmers. They try to educate them, and once they educate them, based on that education and that collaboration with the farmers or farmer community, they generate the demand. And once they see there is demand, then they start selling the product. So this adds a lot of things on the margin, because the cost of return and the cost of managing that inventory is not there. And that's how this company is differentiating in terms of operation with the other company. And that's why you might see the growth is slow, and that's why I told in the beginning, this is a very sustainable growing company. So the company will grow, and the company will grow in a very sustainable way, so that their losses are not there. They will not go into high debt. Okay, you can go there, see the debt to equity ratio, they are not in a very high debt company, and they have some cash also in their bank. And since they're a first gen entrepreneur, it's not like they have a background kind of thing. So overall, I like this company a lot. And as a disclaimer, I'll tell that I have invested in this company around 2 weeks back, okay, when I got this company, the entire, using my research, and I'm planning to hold it for at least till 27, 28 kind of stuff. This is my like as of as a plan, but going forward, things might change because of a lot of macroeconomic scenario. What they have told the management calls also, that if scenario doesn't go as per expectation, we might run into we might not meet the guidance, because they might things might change in US, things might change in India because of excessive monsoon also. So some companies got impacted because of excessive monsoon. So things might change here and there on climatic condition, but fundamentally this company is good. That whatever the company, however they are progressing in a very sustainable and good way. So this was the reason why I chose the stock, and this was the reason why I got invested in the stock. So now it's completely up to you whether you want to invest in stock or not. But what I would recommend, you go and do your research, read the concall letters. If not the concall letters, at least read the notes from Skinner, so that you have some kind of idea what this company is doing and why it is different from other companies. Say different in the other companies, not about profit, about making money. It's about making money and growing the company sustainable in the long term way. Okay, so it's a very cyclical sector. Agrochemical is a very cyclical sector. It depends a lot on the monsoon, it depends on a lot on the raw material price and everything, and this is true for this company also. But their way of operation will not incur a lot of debt for this company, and if there's no debt, there will be a lot of profit will be more, because there's no interest payment. The capex will be better because they have their own money. Their debt equity ratio will be much less. So those fundamental numbers will always be good. And the speed at which this company is growing at speed of 25 CAGR, they are saying both in B2B B2C segment, the profit can easily go up to 30% CAGR for this company. If that is the scenario, you can go and do a back of the envelope calculation and see how the growth can be. As per my number, if the current price to earning ratio remains, and the company grows at a modest rate of 20-25%, what they are saying, there is a potential that stock can go up to market price of 800 in around by 27 kind of thing. Okay, so this is the potential which I have done my calculation, and I've invested in this company only based on that calculation. Okay, now it's up to you whether this stock fits right into your investment horizon or not, and then you can decide whether you want to invest in the stock or not. So this was the video from my end. If you found it helpful, do like the video. If you think this is worth a sharing, do share with friends and family. If you're new to the channel, don't forget to subscribe and let your friends know about it. Thank you so much for watching. Stay happy, stay safe.